This first case study will begin as a warm-up in making broad observations about the chart. In this case, Boeing stock is on a long-term uptrend that occasionally pauses into a horizontal range before continuing higher. Another range forms and completes with another classic continuation higher. Generally, volume is higher around the swing points forming the upper and lower boundaries of such continuation ranges. Volume and price action also tend to increase in acceleration near the beginning and end of a range, such as at the end of January 2015, when the upper portion of the range was surpassed rapidly and with significantly higher volume. Price has risen sharply over the prior range, but does not sustain the incline for long. The possibility of returning directly back into the upper boundary of the previous range increases. The initial peak has given way to a downtrend, and price is trading around or even slightly below the lower boundary of a potential descending triangle. As in most cases, support is more realistically defined as an area rather than an exact price level. This leads to the adjustment of the potential descending triangle to have a wider support base, but still the same general descending trajectory. Now pay close attention as volume increases and price returns back to the lowest areas of the triangle. That is nearing completion. Trading is taking place closer to the descending trend line and therefore near the end of the proposed descending triangle. Strong support around 147 does appear with the bull hammer, but it is red along with the candles before and after it, that strongly close lower with increased volume. In the short term, the descending triangle has completed with a break lower to accelerate the downtrend. Now, from a long-term perspective, attention is directed at the upper boundary of the prior 118 to 144 range. Support is indeed evident in the mid to lower 140s that demonstrate role reversal from their prior resistance in the horizontal range. This leads to a small upswing of moderate strength that is not sustained. This is due to the context of the downtrend and the role reversal that now sees the prior support range in the upper 140s, centering around 147.78, turn into a firm resistance area. Not surprisingly, price is repelled relatively easily, even with low volume at first. Later in July, sharper drops occur with high bearish volume. The original descending trend line remains highly influential as well. It actually pauses the drop with sporadic horizontal trading at the start of August, prior to the rapid break even lower. This takes place in the outline of 3 black crows and general bearish continuation price action at the end of August. The lower boundary of the previous large horizontal range holds firmly around 120. Note the descending trend line is still influential but does diminish in strength, to soon be surpassed by consistent bullish price action and mostly normal volume. It is a solid uptrend to retry the upper 140s that still present clear resistance. Bearish sentiment returns, so it is once again time to take a closer look at the short to medium term. Take note of how trading behaves in these prior ranges. The exact same levels in the 130s to 140s are still extremely useful. The original descending trajectory of the old descending triangle was overcome after returning over its descending trend line, but the overall market sentiment remains bearish, especially with the current descending channel being breached after continued resistance at the upper 140s. The descending trend line from the descending triangle still has residual influence in early 2016. 3 methods falling price action briefly pauses on it before accelerating lower. Other long-term influence can be seen with emerging support from the lower boundary of the large horizontal range around 120. Recent activity highlights the importance of sustained follow-through. It was a weak bullish move in relation to the overwhelming bearish context. Incidentally, the original descending trend line has relevance in that it was the site of a gap down to put the lowest bounds around 118.77 under pressure. Selling pressure remained despite a temporary decrease in selling volume because of resistance around the gap fill area. This led to the strong continuation lower following the decisive break under the support around 118.77 from the old large horizontal range. Overall, it was a stable break in early 2015, but the bullish continuation was halted as a volatile but clear descending triangle accelerated a minor downswing. That was when the prior horizontal range provided clear reference for support. The decisive bullish reversal in early 2016 incidentally lines up with a horizontal range in a bullish continuation from mid-2013. New highs are eventually reached, and a natural pause forms to define a new range. In this range, there is a good example of a sharp and fairly large double bottom. Another example of an accelerated downtrend after breaching a range's lower boundary. In fact, the range turned out to be the general price action of a broad head and shoulders formation. It includes a sharp peak and flat ranges to mark the long-term transition of Boeing from an uptrend into a major correction. When the sharp drop is halted, it occurs at prior major ranges. There is also an example of a descending triangle outline that fails, due to appearing in a neutral to bullish context, and not a bearish situation like what was seen earlier. There is also a downward channel that falls onto the mid-140s support, where a double bottom forms and accelerates with a gap up in November.